I'm concerned about Kadena. There's currently an underwhelming amount of development which is happening on this chain, which as you can see is well reflected in the charts. Now I could be a bit more generous and move this over to a log chart, but the picture is pretty much the same, and if Kadena doesn't do something quickly, it could end up being a ghost chain like Cardano. This happens a lot of the time with layer 1s, there's a lot of excitement in the first cycle, and then coming into the next cycle, it fails to scale, attract devs, build products, attract new users, and this is a recipe for disaster. So in this video, I'm going to highlight my concerns and I'm going to tell you what Kadena needs to do if it wants to become a layer 1 with staying power. Now, I'm primarily going to reference Kadena against Solana because number one, they're both scalable layer 1s, theoretically capable of processing around 100,000 transactions per second, and number two, they're both pretty much the same age. Kadena mainnet launched in January of 2020 and Solana mainnet launched in March of 2020. And despite Kadena being older than Solana, it's failed to scale as much as its competitors. Now before we compare chains and highlight concerns, let's define what a good chain is. The main purpose of a good blockchain should be to provide a good experience for devs to build on with scale. The second stage of a successful blockchain is when devs actually choose to build on your chain, and the third stage is when devs keep on building, which brings in new users, and users drive up the value of the underlying native coin, repeating the cycle. Now, if we further explain this positive feedback loop in practice with Solana, it has number one, provided a good blockchain with low fees, scalability, resources for devs, and many hackathons to incentivize devs to build on their chain with funding, mentorship, and prizes for successful projects. This has led to the second stage where devs have actually chosen to build on top of Solana. Recent data shows that Solana has between 2,000 to 2,500 monthly active developers. And this has led to the third stage where devs have continued to build products, which brings in new users and drives the value of the network. Some examples of great developments in the Solana ecosystem recently have been Whales Market, Jupiter, Drip, a thriving NFT ecosystem, Soul Incinerator, the Solana Mobile, Ore Supply, which is basically Bitcoin on Solana, a thriving altcoin market with the ability to become your own dev and make your own coin within literally 20 seconds, and amazing interfaces such as Phantom, where they've integrated charts, they've integrated swaps, NFTs, everything in a seamless manner. These are just a few examples of apps I interact with almost every single day, and whether you use them or not, it all ties back to the main purpose of a good chain and the three stages of a successful scalable chain. Unfortunately for Kadena, Kadena has been stuck on the first level, which is providing a good experience for devs to build on, and subsequently devs are not choosing to build on top of Kadena. They're mostly choosing either Ethereum or Solana. Almost 6 months ago on YouTube, I highlighted these concerns. This was around the time that Kadena's Ryan Levy, business development and head of partnerships, said this.
Tyler, I won't say hold my beer because I don't actually drink beer, but I guess I will say hold my coffee. Hold my espresso. We are working on some amazing partnerships and projects. And when I say they're coming, this is not we'll be talking about this in a year's time. They're coming.
Now in that time, at least in my opinion, there's really only been one partnership which has mattered at all, and that is the ZK bridge between Ethereum and Kadena. Regardless, it seems Kadena's more interested in tapping into Ethereum's liquidity than incentivizing its own. The most recent dev data that I can find shows that Kadena has around 42 monthly active developers, in comparison to Solana's over 2,000 active devs. So it's no wonder why Kadena is not shipping. Half of their featured products on their website are not even ours, and their community-driven projects are mostly bad interfaces, slow on the front end, and not a great user experience. Their ecosystem is mostly 50% just simple self-custody wallets, a few barely functioning NFT websites which most of the time take half an hour to load, and a handful of meme coins which are struggling to thrive because the ecosystem that they're built on top of doesn't have a massive community with a large amount of liquidity to tap into. Deploying smart contracts is also way more difficult than deploying on Base, Solana, or even native Ethereum. Now, to be fair to Kadena, it does offer a pretty simple grants program, and it does host hackathons with grants ranging from 5,000 to 50,000 rewarded in KDA tokens. So, in my opinion, why can Kadena not get past the first stage of a successful blockchain, which, to recap, is providing a good experience for devs to build on. Now, this is partially because Kadena has such a strong competitor in Solana. However, this also does come down to the base experience for devs to build on. Kadena is built on Chainweb, a proof-of-work blockchain, and the underlying code to deploy the smart contracts is written on Pact. This is Kadena's native smart contract language, and it's also its greatest flaw and hurdle towards growth and mass adoption. Let's say you're an existing full stack dev. If you know Rust, C, C++, JavaScript, Python, which if you don't know are literally the most common and popular coding languages in the entire world, then you can either 1. Become a Solarity dev for either Ethereum, Ethereum Classic, Binance Smart Chain, Tron, Avalanche, Hedera, to name a few. Or number 2, you could become a dev for Solana because Solana uses Rust, but the Solana client has the ability to read other programming languages and convert them into Rust, which then program onto Solana's blockchain. In case anything I said just went over your head, simply, if you know the most common coding languages, then you can dev for Ethereum, Solana, etc. However, if you want to dev for Kadena, you have to learn a whole new programming languages and learn Chainweaver, which narrows the industry you can work in. Let's say, for example, if you know Rust, you can basically dev for an Ethereum project, you could dev for a Solana project, and then let's just say hypothetically crypto goes to zero, you've still got coding skills in one of the most popular coding languages in the entire world, and those skills are transferable to Web 2. Kadena's code, however, is only applicable to Kadena. This is probably why their ecosystem is so bland and lackluster, with poor user interfaces compared to Solana, which runs on Rust, by the way, a programming language that people have been familiar with since 2014. If Kadena wants to reach the second stage of a successful blockchain, which is when devs actually choose to build on the chain, then they have to make a better experience for the devs, whether that's more incentives, more hackathons, grants, easier lessons to learn their code which can cross-read between different languages. I don't know, these are just some random ideas, but it's not up for me to decide these things. It's down to the Kadena team, which have shipped absolutely nothing since the last cycle. Solana keeps on building, even Ethereum keeps on building. If you watch this channel, you know that I genuinely do not give a shit about Ethereum. I don't like Ethereum, but Ethereum is shipping more than Kadena. Kadena isn't shipping right now. It's really that simple, guys. Now, the final stage of a successful blockchain is when devs keep on building. That brings in new users, that brings in liquidity, and that drives the price of the underlying native coin, which then creates a feedback loop. If devs are building on top of Solana and they're getting paid in Solana and the price of Solana is going up because new users are coming in, then devs are going to keep on building. If devs keep on building, users are going to keep on coming. If users keep on coming, liquidity is going to keep on coming. That's going to cycle back up to the devs. They're going to make more products. That's the feedback loop that Solana is seeing right now, which is making it so strong, and which is why basically Solana is outperforming basically everything because they're shipping the most, whether it's applications, NFTs, Solana Mobile, they're doing everything. So in my opinion, if Kadena can't even onboard more than 42 devs, then call me a hater, but I don't think that justifies KDA going back up to its previous all-time high market cap at $3.8 billion. Even its current market cap at $163 million is not justified without some building from where we are right now. If we look at the Kadena total value locked, this pretty much mirrors the network activity. There's currently a handful of extremely loud Kadena users, but there's not enough people actually using the chain. From what I've seen, 99% of people who are invested in KDA, they don't engage in the ecosystem every single week. They simply buy and hold the coin. Maybe they buy one NFT profile pic and then they tweet about how great Kadena is over on Twitter. However, the average Solana user is using Solana at least every week. With Solana, there's always a new meme coin, there's always a new NFT, there's always a new blue chip project, or there's a new application or a swap, or just a new low market cap shitter which is incentivizing people to be active on the network. I personally put through maybe 10 to 20 transactions on Solana every single day. Sometimes it's just some quick trades swapping between tokens. Other times, if I've done lots of swaps, then I'll have empty gas fees in different wallets. I'll use Sol Incinerator to reclaim gas fees in a different transaction. Then maybe I'll look at the NFT marketplaces, maybe sell something, maybe buy something, buy some new coins, DCA into my favorite blue chip projects like Ore, And then of course, yes, invest some small amounts of money in some quick plays, some quick meme coins. There's always something to do. This is why you see Solana having over $4 billion worth of value locked. That means Solana's TVL is over 25 times the entire market cap of KDA. And there's even 5, almost 6 Solana meme coins that have a larger market cap than the entire KDA chain. Dog with Hat, for example, a Solana meme coin, has a market cap over 10 times the amount of the market cap of Kadena's entire ecosystem. So listen, I'm not trying to shit on Kadena. I'm an investor trying to park my money where it's going to grow the most. If you're a veteran of the channel, you know that I've been making KDA videos for over 2 years right now, and you know that I had high hopes of Kadena in the previous cycle, and I had high hopes of a strong recovery based on the fact that I was assuming the KDA team was going to turn things around and build. However, they haven't done anything. So once again, I'm an investor. I'm just trying to get the biggest return on my money, and as you can see, Solana is massively outperforming KDA. Yes, if you bought Kadena at the absolute bottom, yes, you'll be up against the US dollar, but you're still getting decimated against Solana. So this is the Sol KDA chart, and what we've spoken about before literally reflects why Solana is making new all-time highs against Kadena every single week. Building on Solana's fun. There's lots of liquidity, users, applications, metas, and this is the positive feedback loop which we talked about, which keeps on propelling devs to build and users to keep on coming back and using the new products. So something needs to change ASAP for Kadena. Otherwise, we're going to break down into new bear market lows and come all the way down to 30 cent. And as the sentiment switches then, when Kadena makes a new bear market low, instead of making a new bull run high above $28, it's going to be brutal for the ecosystem, and a lot of people are probably going to capitulate. I hope this video made you think. I hope you learned something. For full disclosure, I don't own a single KDA. I've never owned a single KDA, so I'm looking at this very impartially without bag bias. If the team is able to turn things around and onboard devs, and then the devs build applications that people actually want to use and new users come in, I'm willing to change my perspective and buy. I'm open to new data, but after seeing literally almost zero building for the past 2 years, I wanted to update KDA for all the people on this channel who have been asking me for this update. So really, no fun in this video, only facts. I haven't even mentioned things like the vesting schedules, which most people are terrified about, which, by the way, this is literally a VC project. 99% of cryptos are VC projects, including Solana, Ethereum. There's pretty much always a vesting schedule and token unlocks. It's not a big deal. The big deal is the team making sure they have a solid project, so once these unlocks happen, buy-side pressure mitigates it. Anyway, guys, that's all I've got. This may be my last video for Kadena if the team doesn't turn things around. Either way, if you want takes on Bitcoin and Solana, on-chain deep metric dives, technical analysis, deep dives, news, updates on the Solana ecosystem, dApps, new projects, then be sure to subscribe to the channel. Hope you enjoyed. I'm out. Peace.